This is the New Quantum Era. I'm your host, Sebastian Hassinger. One of the themes we come back to a lot on this show is that quantum isn't going to arrive as a single dramatic quantum supremacy moment. Instead, it's an ongoing, distributed, incremental story of scientific breakthroughs applied to technology developments. In a way, this set of engineering techniques collectively are enabling us to apply quantum-level design and control broadly across industries, with potential economic value being created not just from quantum computing applications, but with communication, security, and sensing as well. But if you're an investor, especially an individual investor, how do you gain exposure to that value creation without betting the farm on a single qubit technology or a single public stock? And what does good quantum deal flow even look like at this stage when there are approaching 100 hardware companies and even larger ecosystem of software and middleware plays? We're going to talk today with my guest, Chris Sklarin, about this topic. He is a managing partner at Alumni Ventures, one of the most active venture firms in the US and a pioneer in what they call democratizing venture capital for individual investors. Alumni Ventures raised over $1.5 billion for more than 11,000 individual LPs and built a portfolio of around 1,300 active companies, including a growing set of quantum investments across hardware, software, and applications. Chris and his colleagues are co-investors along top-tier leads, and they've been in names like Rigetti, Atom Computing, Q-Control, and Classique. They've ridden the wild volatility of public quantum stocks, leaned into early quantum sensing revenue, and watched NVIDIA put their portfolio companies on a GTC slide about hybrid quantum GPU ecosystems. In our conversation, we talk about how Alumni Ventures evaluates quantum startups, what they've learned from early exits and SPACs, where they see real commercial traction over the next 3 to 5 years, and how accredited investors can start seeing and learning from live quantum deal materials through Alumni Ventures syndicate. I hope you enjoy our conversation.
Chris, I'm very excited to have you on the show. So why don't you start by a quick personal introduction and tell us a bit about Alumni Ventures?
Absolutely. Yeah. Great to join you, Sebastian. So I'm Chris Sklarin, a managing partner over at Alumni Ventures. And Alumni Ventures is about a 10-year-old, 11-year-old firm. And we specialize, I'd say, in democratizing venture capital. So, making venture capital available to individual investors. We started off with a couple of very small funds and grew that to MIT, Harvard, and Yale were our second cohort after Dartmouth, which was our starting fund. And to grow that to today, we're now, I think, over 11,000 individual investors have joined us. We've raised over $1.5 billion. And we have, I think, 1,300 plus active portfolio companies. So really making us one of the most active venture firms, I think, globally, and certainly the largest in the U.S. for individual investors.
Yeah, I saw there's sort of a list of sort of awards. CB Insights, for example, 2024, you were on the list of top VC firms. So you're quite well known and notable.
Yeah, it's nice to have some of those accolades. Yeah, it wasn't just the CB Insights. They're there. Absolutely, PitchBook has ranked us consistently up there as an active venture firm. Stanford Graduate School of Business has ranked us in the top 50 unicorn investors. I think Time Magazine last year, America's top 20 venture capital firms. So yeah, nice to have that recognition. Myself personally, my backstory, I'm an engineer by training. I came out of MIT and worked in software after getting a 6-1 degree. If you're not an MIT person, that means electrical engineering. Core 6 first. But I took a lot of software, so I ended up doing software as a career, database, telecom. Worked in a bunch of software startups. One was Inc. 500 #1, a couple IPO'd. And as I was working for those in this time, the telephony area, I moved out west and got a Berkeley MBA. So I was out at Haas Berkeley out in Berkeley, California, which is a great place to be. Bay Area is lovely. And then moved back east and got on the venture side. And I've been doing venture now 20 plus years and was with the seed fund, another venture firm, a healthcare accelerator, a growth venture firm, and then joined Alumni Ventures back in 2017. So I'm just a little over 8 years now with
Very
Alumni
cool.
Ventures.
And you said 11,000 investors. So these are individuals who get access to the deal flow on a deal-by-deal basis, or LPs, or a combination of both?
A great question. Yeah, most of them are individual investors jumping into funds. So I'd say it's 11,000 plus individual investors who have joined us in funds. And then the funds, not the traditional GP LP structure, but it's an
Oh, I see.
LLC. They're part of the LLC. And then the fund owns the preferred equity, typically in companies. So my job is managing the funds, and I advise the funds on what we buy. And my team, there's about 10 of our teams, 4 investors sort of in each team, roughly. So about 40 investment professionals at Alumni Ventures. We have offices in Menlo Park, Chicago, New York, and I'm sitting in Boston. And then our headquarters in Manchester, New Hampshire. And then sort of beyond those 40 investment professionals, there's another sort of 80, 90 people that are in the back offices, all either in those offices or up in Manchester.
Great. And you were saying that you co-invest. So some other firm will take the lead and then you co-invest with them?
Exactly right. Yeah. So we're a co-investor, always have been. We take our signals from that lead investor. What is the lead investor doing? What do they know about this area, this sector? How did this management team attract that lead investor? So that's a pretty strong signal. Why did IBM Ventures decide to invest in Kedma's A round, right? For instance, along with Gil Capital, I think in Israel as well. We were in the seed round with that company, for instance. So, we got into the seed round. We knew somebody here at MIT, actually one of the associate deans at the Sloan School, put us in touch with Kedma, and we got a little check, into that seed round several years ago. And then, watch them, follow them on. We typically in our alumni funds have about 20%, 25% of our capital for follow-on investments. So if that makes sense as a aggressive follow-on for good growth, then we can put some more money to work. So that's what happened in this A round, I guess, was last year.
Right. And so the alumni in Alumni Ventures is both the investor pool that you're drawing on, but also the founders, right? I mean, you're looking at technologies that are spinning out from universities or just alumni of universities who happen to be founding a company.
The most important thing here, Sebastian, is a great venture deal. So the alumni connection is a nice to have, and it's not always going to be there. I'd say maybe, at least half the deals will have some alumni connection to a particular school if it's in a particular alumni fund. But really, it could be the connection is, hey, Chris's team found it, and they're associated with the Castor Fund. Castor, if you don't know, is Latin, French, and Spanish for beaver, nature's engineer. So like many engineering schools, that is our mascot at MIT.
Yeah.
I was just on the phone with an entrepreneur yesterday. He was from Caltech. He's like, yep, the Caltech Beavers, right? And he was saying, it really should be the Caltech Quakes or something, right? Because you have the fall from
Not a great patron for engineers, earthquakes, though.
Yeah. But whenever there's a quake, all the trucks pull up to Caltech and they're interviewing that geology department, like asking about geophysics because they know.
That is true. So you've got, as you said, 1,300 portfolio companies across a wide range of categories, but you do have a significant set of investments in the quantum space, right?
Yeah, it's exciting. We have, I think, 5 or 6 investments. Actually, one just popped up on my radar screen today, literally announced our investment today, a seed round. So that sort of ticked the number up by 1. I think our original quantum investment was in Rigetti Computing. So Rigetti was one that had a Yale connection. And I think our guy down the hall here, David, who's my compatriot running the Yale fund, got into that deal. And we, followed along to, I think, an A16Z investment. I think we doubled down when Bessemer invested later on and got more money to work. And, that was quite a ride, up and down and all around. And, but last year was big year in quantum. Willow chip announcement, other things going on. Rigetti had some good news. And so we were able to ride that SPAC, that public stock at that point up. We were able to sell a bunch in Q4 and a little more in Q1 of 25. And we returned a good amount of money there.
Good timing on the exit.
Yes, that worked out reasonably well for us. And I will say that we are definitely following, like many of the investors, we always follow our former CEOs. What are they doing and what's going on? And so I know he's doing a new company now. We're keeping a close eye on that new company, Sigildry. So that's a couple examples. I guess, we can get into other details, but I'd say in the AV portfolio, the quantum sort of breaks down into several different categories, right? We have hardware, software, and then maybe even applications. But on the hardware side, Rigetti, we have investments in Atom Computing, Xanadu. On the software side, Kedma, we've talked about Kedma a little bit, the quantum error correction and mitigation company out of Israel, but also we have Q-Control. I think they're out of Australia, Classique, and this new one that I just saw pop up, Haiku. So
Yeah.
HAIQU.
There's got to be a
And
Q.
then there's an application, yeah,
Yeah.
in there somewhere. On the application side, Boson Q SAR.
Mm.
So there's a bunch from that point of view. Now, not all those are in
Right.
my
Right.
particular fund, but I am running our sort of what we call the quantum syndicate. So if people want to sign up and look at deals one by one, they can sign up for the Alumni Ventures syndicate and look at lots of different deals across all kinds of areas. But they can also specify, hey, I like health
Right.
tech, or hey, I like
Right.
quantum computing, and get the quantum deal flow in
Yeah.
particular to their
So
inbox.
one of the reasons why I wanted to have you on was because this past year, as you already referred to, with the wild ride for Rigetti, and several pieces of good news, not just Willow, but a number of other notable sort of advances seem to have lit a fire underneath the quantum stocks, or a number of companies that are public, but then even the private valuations seem to be increasing. But I saw a presentation at Q2B by an analyst from Evercore, who was pointing out that it's quite barbell shaped, right? There's a small number of companies that have raised a lot of capital, and then a couple hundred companies that are in the very small amounts. And do you have a sense for what that dynamic is that something that's going to persist? Are we going to see some sort of phase change as that barbell structure changes? How do you see the sort of the coming months and years in this space?
Well, I'm loath to prognosticate like
Yeah,
what
of
exactly will
course.
happen with capital flows. But that said, I think quantum is sort of entering an era where we're looking at companies that are really actually making a difference and actually generating revenue and solving real problems. So we're going from just the science experiment, which looks great in a lab, and like someone's put out a couple of qubits, here's 2 qubits, 4 qubits, 6 qubits, right? To companies that are really doing things beyond academic theory. So like on technology, Q control, they've moved well beyond academic into this production grade software that can now do things like error suppression, pulse optimization, diagnostics. And they're being used for things in the quantum sensing world, like to do GPS denied navigation. So they've got real customers and they're doing real things. And I think we're going to see that kind of move from companies where they actually are doing things that actually do open up revenue streams. And of course, investors love to see a revenue stream other than just like invest in me and 5, 10, 15 years we'll have something, because we have funds and the funds are typically
Yes.
10-year funds, right? So we kind of need to see some investment. I think another big signal, I don't know if you saw this, but let me see if I got the right file open. Here we go. It was last fall, Jensen Huang at the GTC 2025 had a slide behind him, his big keynote presentation. Well, on that slide, he had NVIDIA building a hybrid quantum/GPU computing ecosystem, right? On that slide, we had in the Alumni Ventures portfolio, Atom Computing, Classic, and Rigetti showing up. And NVIDIA is not going to put up a slide with science
No,
projects
that's
on
true.
it. Like they are going to deeply embed, right? Right next to the GPU, there's going to be a quantum processor, right? And somehow you're going to hand off AI workloads when they're appropriate to the quantum processor and let the quantum do the thing it can do really well, and then let the GPU do what it will do. And then we had this Merry Christmas announcement, right? 24th. I don't know if you saw that about Grok, the chip company.
Yeah, that's right. Yeah.
So a $20 billion commercial deal, non-exclusive deal with Grok, the chip company. Now they're not quantum.
No, yeah.
That's classical computing, right? They're the inventors of the language processing unit. Happens to be my Castor Ventures 5
Nice.
portfolio.
Congratulations.
So I am very acutely aware of
Right.
this deal, and I'm waiting to see what's going to come of that 20 billion. But that's going to be tightly embedded now in NVIDIA. So those will be doing some workloads, right? The NVIDIA technology is going to take that on, and NVIDIA is going to use the quantum things. And so it's very, very interesting. I think there's going to be real commercial progress happening in the 3 to 5 year time frame, right? Which is well within the sort of time frame for venture investors to be very excited.
But if you're talking about 3 to 5 year time frame, then that's going to be, you mentioned sensing. That would be more along the lines of sensing then, because the roadmaps.
Correct. It's going to take a while.
The roadmaps for like the
Absolutely.
number of logical qubits it takes to make a system that is just purely not simulatable classically is still, it's in that 3 to 5 year range, but it's towards the end of that 3 to 5 year range, right?
Yeah.
So things like sensing, Quantum Brilliance, who was on the podcast in December, mentioned their diamond nitrogen vacancy chips being used in sensing applications as well. Is that what you think of, sort of like almost supply chain or sensing applications as the near term revenue opportunities?
Yeah, I think people are going to start to find various
Mm.
pieces that are going to work, whether it's Jensen Huang saying, hey, you can tightly couple with the GPU and we'll hand things off to you. Or it's something like quantum sensing where it's, near-term traction and revenue while they build a pipeline to get to the sort of long-term. Even software companies like Kedma, right? Kedma's working with various different hardware vendors and trying to make their hardware more effective and, stable and do the error mitigation so it actually could be scaling to do real quantum, advantage kind of
Yeah, and
software
that
work. And, it'll probably show up in chemistry, right? It'll probably show up in material
yes, of
science. It'll
course.
show up in point
Yeah.
solutions to certain
Yeah,
places.
and that's what I meant by supply chain. So I mean, in a sense, you're seeing, that one of the results of that barbell distribution is that companies like IonQ or what were the other ones? D-Wave are acquiring companies that are bringing IP into their portfolio to sort of enhance their product offering. So there's sort of a hybridization and a cross pollination between companies within the quantum space. Is that part of what you see as potential exits for portfolio companies? Yeah,
Absolutely could be.
yeah,
Absolutely could be. I mean, we're looking at things, I think even last quarter, I haven't seen the outcome of this yet, but I think Xanadu, one of the portfolio companies in our portfolio, did a reverse merger and went
right.
public. So there's that kind
Yeah,
of exit. Rigetti did the SPAC, and they went that way to the public markets. But I think more and more of these companies that are able to get to real commercial traction using the quantum sensing while still building toward a full-on quantum computer later on, or if they're software companies that are middleware layers, like Haiku's is more software middleware, trying to make all kinds of different
yeah.
platforms
Well, and
more
I
easier.
suppose there's an element of trying to hedge the risk in quantum computing that's fairly unique, right? I mean, we've got a couple of things that have, theoretically proved advantage, like Shores or Grovers or HHL. But on the whole, we don't really know for sure that we're going to be able to build devices that deliver, value to a financial services firm at scale, right? Like the kind of massive market opportunities. So when I think about software companies, a lot of them have found ways to do, GPU or other HPC powered solutions in the near term. Do you think that's sort of in response to sort of hedging that kind of uncertainty in the quantum space?
Yeah, I think that probably makes sense, and that they're going to start to try and layer in quantum
Right,
when they can to prove that that can really super accelerate these problem these
right.
problem sets. So if it's in finance, if it's in cryptography, wherever it is, they're going to start layering in this additional hardware. I was pretty excited to see Jensen Huang put that slide
Absolutely.
up at a conference. But like he's not one to just talk
Right.
about science
Well,
projects.
and you mentioned Grok, the chip manufacturer, like that does feel like another sort of uh, result of I would say, more heterogeneous kind of compute landscape that's happening, right? GPUs,
Correct. Yeah.
TPUs, specialized inference engines from AWS on ARM architecture, Grok's architecture. It feels like there's this, and then quantum in a sort of even more outside of the paradigm kind of effort. There's a lot of this. All feels like a response to sort of the breakdown of Moore's law in just the straight CPU classical computing evolution. Is that how you see it?
Yeah, to me, that's what really
Yeah.
excites me is to see the quantum blending in. So to see this stuff blend together where we have really a hybrid compute structure that has classical and quantum blended together and will take the best to then help accelerate the
Right.
workloads.
Right. Do you find? I mean, are there sort of unique challenges to sort of trying to extract nascent IP out of a university lab? Because quantum is very much one foot still in the scientific labs. There's still fundamental research going on that is being drawn on directly. Is it are there unique challenges in sort of trying to foster these companies out of that university setting in that very early stage?
Well, from the deals that I've been involved with, I think the universities have been
Mm,
doing, tech transfer for
yeah,
years and years, and they know how to do it. And the investors demand, right? The easiest thing is a Delaware
right.
C corp, et cetera. So, the way to tech transfer and the way to spin out a company pretty
Yeah.
well known.
Well, especially you
So
have
from
the
that point of
advantage of
view,
working with MIT
sure,
and Harvard. Those are two the best tech
exactly,
transfer,
yeah,
along with Stanford. Sort of great track record.
yeah. So from that point of view, and they've all seen investor term sheets, they all know what the investors need. So I think that is pretty well trodden. Now we're trying to find, investors that really know their stuff. And certainly Alumni Ventures, we're not holding ourselves up as the experts. We are the co-investor.
Right.
So we're getting out there trying to talk to the researchers, talk to the entrepreneurs, talk to the investors, and find out, do a little three-legged race here. Why is one getting with the other, and doing the diligence on that sort of
Right.
marriage.
And when you're looking for deal flow now, do you have some sort of desired blend of software versus hardware or other, or, sensing versus security, other types of categories you're looking for?
Not in stone. I would say that we want to be broadly diversified across stage, sector, and geography. So within quantum, we'd like to do a little bit of each of the categories, I would say, but really looking for that near term possibility of commercialization. And when I say near term, under
Yes.
10
Yeah, yeah,
years,
yeah.
right? Not talking about the things that, hey, it's a whole new quantum computer and here's a new hardware platform. But it was really kind of very fascinating to listen to the one from Diamond
Right, right.
Brilliance, because that was like one
Yeah.
I'd never heard of. So like, okay, very
Well,
interesting.
yeah, that's
And also room
yeah,
temperature.
exactly.
So very, very exciting from investor
Yeah,
point of
yeah,
view.
very. Yeah, I mean, it's, it feels like, if anything, we're seeing more novelty, more diversification in the hardware landscape. There's something like close to 100 hardware companies now building their own approaches to qubits, and that's up even from earlier this year. I think Bob Suter does a report, and I think it was March he counted something like 70, and then in August he counted like 90 something. So it's I know the growth is really extraordinary, and it just I think about like how challenging that is from an investment standpoint when you've got, we're in a way we're somewhere between the vacuum tube and the transistor, and we're trying to pick winners out of these radically different ideas about how to build a unit of quantum computation, right? I mean, is that um do you have a strategy, I guess, for trying to deal with that level of uncertainty in this space?
Yeah, I mean, I again go back to being a
Yeah, right.
co-investor.
Okay.
I'm trying to
Fair.
get out there and see what is getting
Right.
funded and who's getting a
Right.
term sheet. I'm always amazed at the innovation that we see in the entrepreneurs and their intrepid natures of getting out there and figuring it out. I talked to an entrepreneur a few days ago who was in the agricultural ag tech space, so literally helping folks and farmers, do a better job. And this was happened to be in poultry. He was taking his insights from aerospace, and they literally are doing fluid flow in aerospace. And he was a Caltech PhD. And it's like, okay, fluid flow in aerospace, where they measure sand going across, they have lasers that can show the sand particles going across an airfoil wing. And somehow he's using that to then measure livestock. And it's like, well, if we can measure a grain of sand as it's going by, we can measure livestock. So, applying something from one area
Right.
and taking it to another usually can be really, really special. So I think in quantum, it's gonna be the same way. They like have these problems that have never been
That's
able to be
right.
solved classically. Oh, but if we can solve it with a quantum, we have this extra oomph on the processing power. Here's what we can do. So it's really
Yeah.
exciting to see the new problems that people are able to attack.
Yeah, absolutely. Absolutely. And so, are do you you mentioned, okay, so there's an alumni angle, but again, I just come back to the fact that, I mean, if you look at Yale, Harvard, MIT, all three of them have incredibly strong quantum information science programs, right? Yale is now is the originator for not only Chad but also Jay Gambetta and Alexandre Blais up at University of Sherbrooke, and is part of the Nord Quantique startup up there. So, do you think that there's almost a clustering around the universities that you're more tightly affiliated with that gives you an advantage in terms of deal flow?
I'd say our advantage is that network
Mm,
effect. Given that we have about 800,000
right.
people in our Alumni Ventures network, 11,000 investors who actually put money with us. And then of our CEOs, we've probably been in like I said, 1,300 current portfolio companies. So really getting deal flow from that CEO network. And so I find that is the most advantageous thing to me for sourcing deals is talking to them in the marketplace and saying, who do you see out there who's
Right.
doing really
Right.
interesting things? And, that isn't necessarily all quantum, but it could be across a range of industries. And then certainly, yes, we do troll the hallways and talk to people at labs and go to the MIT Industrial Liaison Program events and things. So we definitely go to conferences and try and also be present there. So that's really super helpful. But I think our CEOs are the biggest source of great
Right,
deal flow.
right, right. And in looking ahead, I mean, as we mentioned before, the last 12 months has been a wild ride in the public markets for quantum stocks. Part of that seems to have been sort of the catalyst of these news items and a growing awareness of quantum being, the next big thing, one of the potential next big things. But there's also, I've heard it suggested that there's just a purely mechanical sort of volume aspect to this, where there's enough volume where the quant traders are now attracted to it as a segment, and that's driving some of the volatility. Do you think that's true? And do you think that that if there's more participation and more companies that will sort of mature out of that quant-driven volatility in the segment?
Yeah, I mean, it's hard to comment on the public stock nature of it. I think people are saying, is quantum the next
Right,
major tech wave? Is that true beyond AI? And how do you think about it? And to me, I think, yes, it's a major future computing wave, but don't treat it as a sort of
right,
near-term successor to AI. It's a complementary, longer duration sort of infrastructure build and sort of AI scaled because it rode on top of mature
right,
classical hardware. Quantum, it's different, right? The hardware, the software, the talent stack, they're all sort of being built
right,
right now at the same time. So the way I think about it, and investors I think should think about quantum is sort of like optionality and sequencing. Like the upside could
right,
be enormous, but it'll arrive unevenly. It'll start with narrow domains, like we talked about optimization, sensing, security, the scientific simulation for maybe chemistry, material science. It's often, I think, could be embedded inside classical or AI workflows rather than replacing them. So it'll be embedded in there. And so the value creation, it won't look like a single
right.
breakout moment. It'll show up incrementally, like little places. Quantum changes the economics of a specific problem. And so for me, from a venture perspective, I got to be very
Yeah,
disciplined. Like the most attractive companies aren't necessarily the ones promising sweeping disruption or unrealistic timeline, right? But they create value, even if the fault tolerant quantum takes longer than expected. So I keep framing it that way for
yeah.
myself. Quantum is a long-term platform, near-term pockets of usefulness, and then participate in the upside without getting ahead of
I think that's
reality.
really good advice. It's sort of like, don't look for the spreadsheet of quantum computing, but look for, an Airbus or a Boeing or a BMW coming up with changing the economics, making a more durable or a cheaper input into their high dollar products that starts to give them a competitive advantage in some way. Yeah, that's really smart. And I mean, that seems, like a very good advice in general to sort of not over-index on the way that we have been sort of experiencing and viewing and analyzing emerging technology trends of the last, say, 10, 20 years, because this is really a net new thing. As you said, it's not going to be, it won't, when it starts to arrive in earnest, it won't look like previous waves of technology. And that just seems, it's a incredibly challenging investment environment, and it's the kind of thing that venture in particular almost seems designed for. Do you think that's sort of part of the role of venture, is to be that sort of pioneering guide through that kind of landscape?
Yeah, I think so. I mean, venture has always been about disruptive technologies. And you can think back, I don't know, back 20 years ago, nanotechnology is coming out. Everyone's like, who's going to invest in nano? What's nano going to do? And really, it was an enabling
Right.
technology, right? We invested in various different material science plays, et cetera. And now, you can buy yourself a pair of khakis and you spill coffee on it, it rolls off. And it's the most mundane thing ever. But you're like, oh, that's
Right.
nanotechnology. And it's built right in. And it's going to be advances like that. It's just like little things that happen. So little things that happen to help increase the usability of whatever the product or service is that they
Well, I
help.
think it's a great model for, given that kind of complexity, the type of democratizing access to venture investing that you're doing at Alumni seems like a terrific way to approach it, and a great sort of option for people to look at. And you were saying that you can now join Alumni Ventures just sort of with no pre-commitment, just to start looking at deal flow
Correct.
as an
Exactly.
individual.
Yeah, you just have to log in, go to av.vc. That's our website. You can go to, if you like my fund, go to Castor, CASTOR. And you can scroll down and join for free. And then you're joining our Alumni Ventures syndicate. And you can, check off various options. So for this podcast audience, check off the quantum option, right? So you want to get interested deals in quantum. But then, you just basically self-attest that you're accredited and, go through a waiting period. Anything you view when you go into our deal portal, every deal you view, it's going to be, under non-disclosure. You aren't supposed to spread that around the world, right? Your name, your IP address, your email address is watermarked on the due diligence, et cetera. But you can look at deals one by one. It's a very low minimum to get in. You can do a deal. I encourage people to do deals in the fund. So if they join a fund, again, a very low minimum, but then we're going to do 20 to 30 deals in a fund year. And that gets you
Right.
diversified because it's a power law asset class, and it makes sense to be in a lot of deals to have the winners show up. So I would encourage everybody to do some funds, but they can certainly join the syndicate for free and look at
Well,
deals
and
one by
even
one
on
to get an idea
just
of
an
the-
educational basis, like being able to look at the deal materials individually, I think is really interesting at this stage of the maturation of the market. That's really, really exciting.
Yeah, it's exciting, and it's exactly the same document I share with my colleagues. So whenever we do a deal, there's usually a sibling fund. If I'm doing the deal, then maybe my colleague down the hall, Laura or David, will be tagged on that deal, and their team's going to also possibly invest, and so they got to score the deal. So it's the same document we're sharing with them to sort of talk that
That's
deal.
great.
And it's great education for people who want to learn, more about venture capital.
Well, Chris, this has been really interesting. I appreciate your time, and thanks for joining. Any last comment or insight you want to leave us with?
Well, I just say it's an exciting time to be in venture. I think we're preparing for a future where the quantum accelerators, right, are not standalone, but they're really going to be, like we said, inside the AI and HPC workflows. So I think that's the most exciting stuff. And, quantum is transitioning from speculative research to sort of strategic infrastructure planning. So that's exactly the inflection point I think we as investors are looking for, even with timelines being long. So exciting to talk to you, and thanks for the
Excellent.
opportunity.
Thank you very much.
Thank you for listening to another episode of the podcast, a production of the New Quantum Era, hosted by me, Sebastian Hassinger, with theme music by OCH. You can find past episodes on www.newquantumera.com or on Blue Sky at newquantumera.com. If you enjoy the podcast, please subscribe and tell your quantum curious friends to give it a listen.